As you probably know, Australia has a range of tax legislation for property investors. As an owner or a part owner of a rental property, income tax legislation requires you to declare any rental income you may receive. Importantly, tax legislation allows you to claim expenses relevant and incidental to that source of income. Deductible expenses would include the following. This includes property management commissions, inspection fees, and any other incidental fees that an agent may charge you for managing your property. Expenses incurred in borrowing money solely for income-producing purposes, including valuation fees, broker's commissions, application fees, survey fees, and any other incidental expense charged by the lending institution. If the property is leased, furnished, or equipped, depreciation on furniture, fittings, floor coverings, and white goods are all deductible. Building depreciation also applies and can be calculated by obtaining a depreciation schedule for the property from a quantity surveyor, the cost of which is also a tax deduction. Any expenditure on repairs and maintenance to the leased property are deductible. However, these do not include alterations or improvements to the property. For example, replacing a sheet of iron on an old roof may be a deductible expense. On the other hand, replacing an old iron roof with a new tile roof is a capital expense and not deductible. Although expenditure on improvements and alterations are not deductible, it is advisable to keep all records of this expenditure, as they can be included in the cost base of the property when calculating the gains on the sale of that property. A tax deduction is applicable for capital expenditure incurred on the construction of new buildings, used for the purpose of producing assessable income. Capital expenditure includes alterations, extensions, and improvements to the property. You should consult with your personal tax advisor, as they will be best qualified to confirm your allowable deductions. Ask your property manager to put you in touch with a tax depreciation expert for a depreciation schedule. These can make a massive addition to your tax return and are very underutilized. With accounts, this area is very important to your property, so you need a real estate partner that you can trust. Generally, rents are collectible in advance on a weekly, fortnightly, or monthly basis and submitted to the owner, together with a statement of rents received and all expenditure items. Disbursements or property owner expenditures will typically cover your levies, rates and taxes, maintenance and repairs, insurance premiums, lawn mowing or gardening services, or pest control. However, these are all subject to change and we cannot give financial advice. So I do advise that you speak with your accountant on deductions and depreciation, but we're happy to put you in touch with a professional if you would like any assistance.